Hi everyone, I'm Jason Weisgerber with Coldwell Banker.
And I'm Kim Crea with Nova Home Loans.
So we wanted to talk to you today in this episode 2 of the home buying process about the loan products that are out there and available. So Kim, what are the many different home loan products that people can find?
So the loans that we originate here at Nova are conventional loans, which is your typical Fannie Mae, Freddie Mac loans, FHA, VA, USDA, and included in there are down payment assistance loans.
And folks are going to want to know about this down payment assistance thing, but let's just talk a little bit more. A conventional loan is typically where somebody might come in and pay, say, a 20% down payment, right?
Not necessarily.
Okay.
Good news is minimum down payment on a conventional loan these days is 3%. So you're going to pay a much higher mortgage insurance rate, a higher interest rate potentially, but you can get in a house for as little as 3% down on the conventional side. FHA is 3.5%.
Okay, that's good news. So now, if you're paying a lower down payment, it's also, I mean, from the buyer standpoint, it's just going to make your monthly loan payment bigger.
Correct.
So why would, maybe they don't have the money for the down payment, or what's the motivation behind those options?
So as I'm getting your application information and pulling credit, we're talking about what's your ideal monthly payment? What's your ideal cash to close? What do your credit scores look like? And as I start getting these pieces to the puzzle, we start looking at what's the ideal loan product for you. And maybe the monthly payment isn't as big as a stressor as the cash to close. So then we start looking at lower down payment options.
Okay, that makes sense. So I might be able to afford a little bit more in a monthly payment, but I don't have a lot of cash on hand right now, so I can pay a lower down payment.
Right.
Okay. And how does that apply for FHA and VA?
So with a VA loan, zero down if you're working within conforming amounts of 529 or less. If you're higher than that, you might have a little down payment. But VA is a great benefit with no down payment required, as I mentioned, maybe an upfront fee, versus FHA is for those without VA benefits, 3.5% down. You're going to have an upfront mortgage insurance fee that gets rolled into the loan, and then a monthly mortgage insurance factor.
So I'm curious, are you finding that buyers are having less impact when they're using an FHA loan product versus somebody that's got a conventional product?
So FHA loans and VA loans are not any harder to originate than conventional loans. It doesn't take any longer for the appraisal process or for the underwriting process. Really, the only thing that might be a little bit more difficult or hard is the appraisal. The appraiser is required to look for health and safety items like peeling paint that they wouldn't look for in a conventional loan.
They will look for that in an FHA and a VA loan.
Correct.
And if I'm making an offer as a realtor on behalf of my buyer, is the seller going to be able to tell if I'm making an offer with a loan that's conventional, FHA, or VA?
They will, because that's designated within the contract.
Okay.
And really the only thing that might not be appealing on that side is that the appraisal deadlines don't count with FHA and VA loans on a contract.
Okay.
They're not applicable.
And then down payment assistance programs. What does that mean?
So we also work with down payment assistance programs. We've got the Colorado Housing Finance Authority, which generally speaking everyone calls CHFA, or the Denver Metro Mortgage Assistance Program. It's also called Denver MMA.
Okay.
So those programs are bond money programs that provide money for the down payment. However, what you need to understand is the closing costs are higher because those programs charge origination fees that we don't otherwise charge, and their interest rates are higher. Generally, right now, they're running over a point higher than a current market rate.
Okay, so it'll cost you.
It'll cost you. That free money is not so free.
It's not so free. Always the best idea is to talk to your lender. I always say that as a realtor, especially when we're just getting started. The first thing you really want to do is call Kim, call a lender, and talk to them about where you are financially, and then they'll let you know what you can shop for in the housing market.
That's right.
Sound right?
Sounds great.
Until next time, thank you for joining us, and we'll see you soon.